Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today we're going to update to the Las Vegas real estate market. Today is February 1st. We have all the data, which encompasses all the January data in Las Vegas. We're going to go over all the trends and all the happy numbers. We are watching live the market turn in real time. Watching it. Okay. So let's start with the first slide. This is a slide we always do, Market Action Index. As you see here, this little needle, something we track. Everything in the dark area is the seller's market, everything at buyer market. We never actually hit buyer's market, never really got below 30. It's at 33, which is a little higher than it was. It was 31, 32 for most of the fall. It's starting to move. We'll watch this as we go forward. Every single year, this thing tends to rise in the fall, in the spring, and drop in the fall. It's just an index.
Right. So where we are right now is where we've been for the last about 2-3 months. No big changes.
Okay. Now here's the market action index over time. This is over the last 3 years. If you go all the way back to the left, you can see that's in the 30 to 40 range. Then the market took off, and we had those two unusually high years of buying at the springs. But you can see even between springs, it dropped. So the end of 2021, this winter of 21, it was low, just like it was lower than it was in the spring. So that is cyclical, and you can see the trend on that where it looks like it's starting to change, starting to turn.
Right. So I mean, what you're looking at is the market basically doing a repeat of what it does every year. That there's nothing exciting here. So sorry for the people who were expecting the market to tank. That's not happening right now.
We're gonna go through this. This is pretty interesting. This is the real-time market profile. This is very, very day specific, and this is one interesting thing caught our eye. A lot of these are starting to turn to the positive, and the ones you see going down are usually good that they go down. But the one that caught my eye was the median price of new listings that came on the market on December 23rd was $440. The median price of listings that came on the market today was $489. That is a over 10% increase.
Right.
It does move around, but in markets that are being crushed, that are collapsing, crashing, whatever you want to call it, this phenomenon does not happen. They do not start to trend up, and you can see almost every day that they started to move. That shows the market is turning and the market is moving.
Right, and this is encouraging. This is a good thing because it means that sellers have more confidence. And they wouldn't have the confidence if the buyers weren't out there. We've done videos, recently showing you guys that there are a lot of people who want to buy a home this year, and there just is not enough inventory for them. And apparently sellers have gotten that memo, and they're saying, hey, I want a couple more bucks for my house.
The next slide here is price per square foot. This is the same thing. It's every day, but this is all the houses that have sold. What's interesting here is that it actually went up from the 13th of January to the end of the month. This happens when it's at the bottom. It tends to kind of sit at a number before it starts climbing. If you look to the left, you see it was higher and it was declining, but it looks like it's turned. It's highly unlikely that this price per square foot will drop, given the other things that we're getting ready to show you. And this also does happen. Price per square foot, we're going to show you a chart. Price per square foot does actually go up and down throughout the year. It doesn't just always go up, right?
Right. So remember, we're looking at all these things because we are going into spring. We understand that it's February 1st and it may not feel like spring, but we are going into spring. That is the hot real estate market season. So we're going to see all of these numbers probably go up, which is normal and natural. Now, are they going to continue to go up throughout the year? Probably not. They're going to do what you can see all these charts are showing you, that they're going to engage in the cyclical nature of real estate. But right now for the spring, it looks like we're going to have a very healthy spring.
Yeah. So this is price per square foot. If you watch our videos, you try to figure out why are there 4 lines? This is the 4 quarters of the market. The blue is the highest priced homes in the top quarter. And those next 3 lines is the whole bottom 3 quarters of the market. That's where most of us play. That's where most of us live, right? That's the core part of the real estate market. As you can see, by looking at the top, it's highly volatile, but the prices per square foot go up in the spring, down in the fall. They do every year. Even in the super hot year, they dropped. So they dropped again, but you can see that they're leveling off. What's interesting is the bottom 3 quarters of the market, it did a very slight adjustment. Now, what's interesting is the total among the whole market was 8%, but that included the high-end homes and the low-end homes from peak to trough. We're still up year over year in the bottom three quarters of the market. If you look at that little those triangles, those are 1 year apart to the day, and it's more now than it was a year ago. But the top quarter is down. So the top quarter is sort of like making it look like the market is being crushed. But the bottom part of the market is actually did a slight price adjustment. And as you saw in that last graph, the numbers are starting to turn.
Right. And remember, the top quarter of the market is actually, it's a top quarter because we're looking at it by price, not by number of homes. So that's an important distinction. So when you're looking at this, understand that the majority of homes, not just 75% of them, but a lot more than that, are actually in really good shape as far as their values not having been negatively impacted for over the last few months with interest rates.
One more thing about that chart that's interesting and anecdotal. I've heard numerous agents stating that they've started taking buyers out, that two things have happened. One is they're getting an inordinate number of buyers calling them, a lot of buyers calling them. And then they said on their, one agent specifically said on her showings of homes under 400,000, every single time they went to a house, they either had to wait for a buyer before they could get in, or when they walked out of the house, there were buyers waiting to get in. That they were running into other buyers, seeing these houses that you wouldn't have seen the months we said were the best time to buy, which would have been October, November, December, and then the first part of this month, January, because there weren't a lot of buyers looking. It was more inventory to pick through, and now that's changed.
Right.
This is the price per square foot. What's interesting here is that 70 average, 90 average is basically the same. Remember, the bottom of this chart's 150. It's not zero. So when you see that decline, it's actually not that much. It's only 7 or 8%. But when that 7-day flips above the 90, that's a leading indicator. And if you watch a dashed line, it was ahead for like a year and a half, and then it was below for the last 7 or 8 months. But once that flips, that means home price, that's our indicator that the trend of home prices is higher. So right now that those numbers have come so close that it looks like it could flip. But remember, this is closed price. This is a lagging indicator. Why is closed price lagging?
Because closed means that transactions have actually closed. But remember, they went under contract 30, 45 days ago. So that's why it's a lagging indicator.
Okay, so these deals that were negotiated in the past are already back at parity. Chances are the opposite's happening. It's probably the prices are already going up. We don't know about this usually for a month and a half afterwards that we hit a bottom. We're actually starting to see it. We may have bottomed out in December based on that information. Okay, here's the other one. Properties with price decreases, okay? Now remember, you weren't seeing this in the fall. The number of, everyone was quoting the number of 64%. And they'd see like, what's 64%? 64% of all homes have had price decreases. That's terrible for the market. Well, guess what is rapidly changing? That's going away. What's funny is if you look at this chart and go back the last 3 years, every year the number of homes with price decreases rose. It happens every year. But people were saying, oh, this is the telltale sign of the market's bad and bad things are going to happen. But now the opposite's happening. It's happening in dramatic style where people are less. So why would less people have price decreases?
Because they're selling their homes. I think the interesting thing is that people are increasing their prices. So people who have been listed, they're raising their prices. I think that's a very interesting phenomenon because that speaks of the seller's confidence to sell their homes this spring. Okay,
so that leads us to the next slide. Properties with price increase. As you can see, it was artificially high for the COVID buying season, the hottest real estate market in the history of real estate, where we still had low inventory, but we had tons of buyers snapping up properties, pushing home prices up. But you can see that leading indicator there, that little dashed line all the way on the right, which is it's starting to go up where you have people. This also does not happen in terrible, horrible, collapsing markets. You do not have people. In the REO markets, there were zero. From 2007 to 2010, zero people raised their price. They always had to drop their price to compete with short sales and REOs.
And that's not the case now. So the other thing that's kind of interesting is I just got just kind of anecdotally speaking of that, sellers are getting wise to the loan assumption, and they are getting those assumption packages from their lenders, and they're starting to provide these to their real estate agents when they get their home listed, because they've got these loans for 2.75%, and they understand that those loans are valuable, and those loans make their home more valuable, so they can afford to ask more money for their home.
The last chart is inventory. The inventory, as you can see, climbed all the way up till November, when it made a drastic turn and started falling. The leading indicator here is that home inventory, the number of homes on the market, will continue to drop. As you can see, the bottom. Now remember, the bottom of this is not 0; it's 1,000. But it still puts us in perspective that where this is headed. This is likely to continue to fall. It looks like every month, April, May, where it starts to level off and it does its normal. But this does this every year. What is also is not apparent is, remember, this is the last 3 years. The last 3 years of the housing market has been the lowest inventory nationwide ever. If we can't expand this more in 3 years, because this is far back as the software goes, but I have other charts, you've probably seen them, that show historically inventory in the housing market. We will not sell 5 million, 6 million houses this year, because there won't be that many homes to sell. So Wanda, where does that leave us in Vegas? We're going to have what kind of inventory, what kind of buyer demand, give me your overall picture of what housing looks like in the spring, because people, they've been calling us, asking questions. What's going to happen? What should I do? Right? And no one can know exactly what's going to happen. But what do you see? Because you're in this every day looking at this.
Right. So what I see is diminished inventory compared to buyer demand.
Okay.
When we have open houses, it's like we're giving something away, because there are so many people coming through. They're very interested in seeing homes.
Okay.
Buyers are, and we've said this before, that in the last 30, 45 days, we've had more buyer calls than in the previous 6 months put together.
Yeah.
So
they're calling us.
Right. There's a lot of buyer interest. There's a lot of buyer demand, and the inventory just isn't there. I mean, we are listing homes, and homes are coming on the market, but not enough to satisfy that buyer demand. So that means that when things get in full swing in another month or so, it's probably going to be pretty busy out there. It's going to be pretty challenging for buyers to get a property. I think we're going to maybe see buyers without a lot of down payment struggle again.
Okay.
I think that might be a struggle again. I think cash is going to mean a little bit more for a lot of people, because there's more certainty in those transactions. So I think it's just going to be kind of a rerun of what we've seen before, which is what happens when there's just not enough inventory to satisfy the demand.
Impending market crash?
Not this spring.
Not this spring.
Not this spring.
Something else has to happen.
Something else has to happen, yes.
Okay.
All right. So what do you think is happening? We obviously think that real estate market is pretty healthy in Las Vegas. Nationwide, we're looking at selling 4 million homes if we're lucky, and not because there aren't enough buyers, but because there aren't enough sellers. So what do you think is happening in Las Vegas? What do you think is happening in your market? Please let us know in the comments. We'd love to hear from you. Let us know where you're watching from. Please like the video, share the video, subscribe, hit the notification bell. That's your homework, and we'll see you on the next video. Bye.
Bye.